Good morning friends. So in this video now I will be starting with revision of chapter 6 decision making of CA final costing subject. Now generally most of students feel that chapter 6 decision making you feel that it is the most important chapter of your CA final subject, but let me tell you, it is not. Yes, decision making is not the most important chapter. Agreed that yes, this chapter is the longest chapter. Yes, it is. This chapter has a very wide variety of coverage. Yes, it is. The chapter will be the most time consuming chapter. Yes, it will be. But in spite of all that, it is not the most important chapter of your subject. So please don't unnecessarily give very wrong weightage to this chapter. It is important, yes, but it is not the most important chapter. It is time consuming, but it is not the most important chapter. Well, yes, that is CA final for you. CA final level, it will not be so simple. The things which are time consuming might not be most important. Approximate weightage of this chapter in every paper will be around 10 to 15 marks. But yes, it will be 10 to 15. It will generally not be less than 8 or 10 marks. But in spite of that, there are other chapters which are much more important. Other chapters like chapter number 8, performance measurement and evaluation. That is mostly a theory chapter. In spite of being a theory chapter, it is most important because it has the maximum weightage in the exam. Yes, so here we are revising chapter number 6, and trust me, this revision will help you because you cannot afford giving too much time to this chapter for your final exam. During our regular sessions when we did this chapter, it would have taken a very long time. Many days we had spent in this chapter. One of the reason behind that was that in order to do this chapter, I had to revise certain topics of IPCC for you. In order to learn this chapter, we had to revise certain topics from your CA inter level. Topics like CVP analysis, topics like marginal costing method to make profit statement, all those things we had to revise before this chapter. That is what makes the chapter a little more time consuming. Yeah. Anyways, this revision session should help you because due to this revision, you can cover up majority things of the chapter in a very short time. Done. So we'll start with the revision. In my revision, I'm splitting my revision into these 7 points. These are the 7 major topics in the chapter. This chapter does not have any important theory. No. Does not have any important case studies also. No. This chapter, what is important is only 2 things. Number 1, the calculations, and number 2, most important, is the analysis part. At the end of the revision, I will cover the main part which says that how to answer analysis in the exam, because in every question they will not expect only the calculated answer from you. The examiner expects you not just to give a calculated answer, he also expects you to give some analysis of that answer. Yes, so that analysis will be will be my last discussion in the revision. In short, total this is what I cover. First topic is about methods to make profit statement, then CVP analysis, relevant costing. Yes, I'm covering relevant costing, CVP analysis, everything within the same decision making chapter. Then key factor decisions, along with that product mix decisions, make or buy decisions, new offer acceptance, and some other chiller topics there. And then finally, how to answer analysis. Done. This is my contents of the revision notes. I will be showing you summary notes for the chapter here, and like I had told you in my announcement video, you will find the link of these summary notes in the description below the video. Yeah. Anyways, so starting with the decision making revision, first I've written some rules here, some guideline here, saying that these summary notes cover rules and formulas regarding most common practical questions of decision making. Read this so that you may spend less time in solving the questions of decision making and rather use more time in understanding how to write analysis. I will repeatedly keep telling you that now what is more important is the way you mention your analysis in the answer. Yes, write analysis in practical questions as discussed in the class. Also use more time to read the theory. Yeah. Look, I will also repeatedly tell you in every revision video that when you answer questions at now CA final paper, When you now answer questions in your CA final costing paper, you are not just writing calculations in your answer. In fact, when you draft your answer, think as if you are a practicing chartered accountant. Imagine as if you are done with your CA exams cleared, you're already chartered accountant, you are running a practicing firm, you are practicing chartered accountant, and a client comes to you asking for some suggestions. Client comes to you with some problem or asking for your suggestions, and you are giving suggestions to your client. That is how you frame your answers in the exam. Now think, when a client comes to you for suggestions, will you just give him calculations and chalo ho gaya, answer aa gaya? No, you don't just give a calculation and give the answer to the client. Rather, you need to explain to the client why this calculation. You need to explain to the client. You need to convince him regarding the calculations that you are doing. Well, that called analysis. That is what you need to mention here. Anyways, we'll come to the analysis part at the end of this revision. Starting with the portions here, the first topic in the chapter here is regarding methods to make profit statement. We had started this topic when we first did standard costing, but in the decision making chapter also I had given you some more details about that topic. What exactly is this? Well, there are two methods to make profit statement. For presenting profit statement, yes, these two methods are just for presenting. These methods are not for deciding the selling price. Yes, it is just for presenting the profit statement. You can present the profit statement by absorption costing method, or you can present profit statement by marginal costing method. These are methods for presenting profit statement, not for deciding selling price. Selling price decision is always done using the rate method for fixed cost. Well, here you have two methods, absorption costing method, marginal costing method. Let me tell you the main difference between these two methods. An absorption costing method is a method where fixed cost is converted into rate, and that fixed cost is added to the product cost based on the rate. While marginal costing method considers that product cost will contain only variable. Yes, so absorption costing method says that both variable and fixed costs are taken in product cost, while here only variable cost is taken in the product cost. And when I say product cost, means the cost of production, COP. Yes, so fixed costs are taken in product cost by making a rate, by converting it into a rate. Generally, we call that rate as absorption rate. Overheads में किया है in your interlevel. Yes, it is known as absorption rate, hence the method is known as absorption costing method. While marginal costing method says that fixed costs are taken separately directly on total basis, meaning it is not added to product cost. It is shown separate from the product cost. Yes, I can show you that in the format here. Dekho, when I say sales minus cost of sales is my product cost. Well, in absorption costing method, my cost of sales will contain both variable and fixed cost, and the fixed will be based on some rate. While in marginal costing method, you can see cost of sales contains only variable. Cost of sales will there contain only variable because fixed cost is not taken in the product cost. Yeah. So in absorption costing method, sales minus cost of sales, which is total cost, will give me profit, but that profit might contain some differences because fixed costs I have taken on rate basis. Your actual fixed cost might be different, which was leading to under absorption, over absorption. So that difference in fixed cost you adjust will then give you the correct profit. Yeah, but in marginal costing method, sales minus the variable product cost will give contribution, then you deduct the fixed cost. So now if the fixed cost is deducted separately, not in the product cost, separately, then the fixed cost need not be taken based on rate, rather it is taken directly based on total. So now the profit which I get is already the correct profit. Yes, this was the main basic difference between these two methods. Yes, also because of this difference, if my COP contains both variable and fixed cost, well, therefore my stock valuation will also contain both variable and fixed cost. While in marginal costing method, COP contains only variable cost. So stock valuation also contains only variable cost. Fixed costs are treated as product cost over here, while fixed costs are treated as period cost. Product cost means the cost which is added to product. Yes, it is added to product by converting into rate, while there fixed cost is treated as a period cost. Period cost means the fixed cost pertains to time period. Fixed cost is monthly cost or annual cost. It is not pertaining to the products. Yes, this was my major difference here. Yeah. And under absorption costing method, the difference in total fixed cost is then later adjusted by adjusting under absorption or over absorption. While in marginal costing method, no such adjustment is needed. Done. We had done one question regarding these two formats, and in that question we just practiced the question in a detailed format like this. This was the detailed format. I'm just giving the format here just for revision purpose so that you can easily recap that. In case of absorption costing format, you notice that from the sales I deduct all cost, where even the fixed cost is deducted, which is based on absorption rate. While in marginal costing format, fixed costs are not shown. So the total COP that I get here is only variable, while here the COP I get is both fixed plus variable. And if the COP here contains both fixed and variable, naturally, so my closing WIP, closing FG valuation will also contain both fixed and variable. Yes, while here my COP contains only variable, so my closing FG here will contain therefore only variable. Done? Yes. Okay. Accordingly, I get the COGS here. Then you have to adjust under absorption. Will give you adjusted COGS. Deduct that from the sales will then give you gross profit. Less other costs will give you the net profit. Other costs contains now variable S&D, fixed selling expense. Acha. One logic here that you might have doubt here is that for fixed factory and fixed admin, I have taken them based on absorption rate. But in this format, my fixed selling is taken total, not based on absorption rate. Why? Well, my fixed selling is taken directly on a total basis here, not based on absorption rate, because selling overheads anyways does not come in product cost. Think about it. Selling overheads anyways never comes in product cost. Product cost means COP. Does the selling overheads come in COP? No. Now my method here says that fixed costs are taken in a product cost based on rate. Selling overheads is anyways never taken in product cost. If selling overheads is not supposed to be added in product cost, then for selling overheads, I don't need to make a rate. Selling overheads I will take here directly on a total basis, not on rate basis. So the concept behind absorption costing method is that fixed cost is added to product cost based on rate. But which fixed cost? Only the one which attributes to the product. Selling overheads is never incurred on production. Selling overheads is incurred on sold units. So when I'm adding cost to the product cost, it will be added on the production units, and that will be added based on rate. Selling overheads is anyways never added to products, so for selling overheads I don't need a rate. It is taken directly on total basis. Done. While in marginal costing method, none of the fixed cost is taken in product cost. If none of the fixed cost is taken in a product cost, so all the fixed costs are taken on total basis. All the fixed costs here are taken on total basis, not a rate base. Done? Yes. So that was our marginal costing and absorption costing method. Next important topic we had learned was CVP analysis. This was again a recap of all the things that you have done in your CA Inter level, CA Inter marginal costing chapter. Yes. So I have just given you a list of formulas here that will be from your CA Inter level, plus some advanced workings also we will revise. Yeah. First of all, some basic formulas. Well, basic formula first of all was this. In fact, this was the formula based on which we derived many other formulas. Yeah. So my first formula here is saying output equals to F plus P upon contribution per unit. F plus P is fixed cost plus profit, contribution per unit you divide, it will give you output units required to earn a target profit. And repeatedly I had told you in my class earlier, again I tell you that in my opinion this is the most important formula under CVP analysis, because many other formulas are derived based on this formula only. Yes. Second formula I had given you was sales. If units required for target profit is this, then the sales value required for earning target profit, sales rupees required to earn a target profit, will be F plus P upon PV ratio percentage. Look at the difference. F plus P remains the same. देखो numerator F plus P is remaining the same. If I divide contribution per unit, then it gives me answer in units. If I divide contribution percentage, then it gives me answer in rupees. Hence, I give you this rule here saying that whenever I give you this simple rule here saying that whenever you want answer in units, then you divide per unit rate. But whenever you want answer in terms of rupees, then you divide percentage rate. Please remember that simple rule. That rule applies not only in this formula, that same rule applies for break-even point, margin of safety, shutdown point, indifference point. If you remember, at all these places I had told you the same rule, that all those answers, if you want that answer in units, then you divide per unit rate. If you want that answer in rupees, then you divide percentage rate, depending on what you are given in the question. In the question, if contribution per unit is possible to find, then you will get your answer in units. But if that is not available in the question, maybe in the question they have given you only contribution percentage. PV ratio means contribution percentage. So if they have given you only contribution percentage, then you can get your answer in rupees only. Done? Yes? Okay. Next, what is the PV ratio? PV ratio means percentage level of contribution. It is contribution divided by sales, or it can be taken as a change in profit by change in sales. These were some alternate formulas. This comes from your intermediate level. Then break-even point, margin of safety, both we learnt together. Break-even point is that level of sales at which your profit equals to zero. Margin of safety is my total sales above the break-even point. Look, if my break-even point is 500 units, does it mean I will sell exact 500 units only? Does it mean I plan to sell only same exact 500 units in the next year? Obviously not. If my break-even point is 500 units, then my estimated sale, my plan to sell next year will be much more than 500. So whatever I sell after break-even point is called as margin of safety. Margin of safety means the level of my total sales above the break-even point. Yeah. At the level of break-even point, total contribution is equal to fixed cost. Only then profit will be zero. Yeah. And during margin of safety, fixed cost will be equal to zero. So now think, for break-even point, your profit is zero. So in this formula, I remove profit. What remains is then fixed cost divided by contribution is your formula for break-even point. You see that here. At break-even point, profit is zero. So formula is fixed cost divided by contribution per unit, or fixed cost divided by PV ratio percentage. You divide per unit, it gives you answer in units. And if you divide percentage, it gives you answer in rupees. Done? Yes. While for margin of safety, fixed cost equals to zero. Fixed cost equals to zero. Then in that same formula, fixed cost is zero. What remains is profit divided by contribution, or profit divided by PV ratio. Well, that gives me margin of safety formulas: profit divided by contribution, profit divided by PV ratio. Sometimes BEP might be in percentage terms. So BEP percentage is BEP out of the total sales. MOS percentage is MOS out of the total sale. Yeah, and you should know that BEP plus you should also remember that BEP plus MOS should be equal to total sale. BEP plus MOS, yes, should be equal to the total sale. Done? Yes. Okay. One more formula there, that BEP can also be obtained as fixed cost divided by total contribution, and MOS is profit divided by total contribution. Okay, these were all from your intermediate level. Further, some general analysis, some general notes for that again inter-level discussion, that whenever you need to calculate profit for a given sales, imagine sales is given, you need to find profit. Generally, when sales is given and I ask you to find profit, what you will do is you will make a profit statement. Yes, profit statement will give you profit. But I have a shortcut here. Shortcut, that if you are supposed to calculate profit and the BEP is already known, you already have the BEP, then to find profit, you don't need to make a full profit statement. Remember, now to find your profit, if you already know the BEP, then profit can be calculated by shortcut method. What is the method? Well, the method simply says that for sales above the break-even point, sales after break-even point, any contribution earned, that itself becomes the profit. For sales that happens after break-even point, whatever contribution is earned, that itself will become the profit. Done? Yes. Okay, that was one shortcut here. Also, sometimes you might have to apply high-low method. You remember high-low method? High-low method was the method to segregate fixed costs and variable costs. Assuming that you remember from your inter level and maybe from your regular classes level, we have done that many places. It is a method to differentiate fixed cost and variable cost out of total cost given. Yeah. So when you apply high-low method, if the fixed cost is changing, then high-low method is not applicable. The fixed cost is changing, then high-low method will not be applicable. Why? Because there is a basic assumption in high-low method that fixed cost total remains constant and variable cost per unit remains constant. I repeat, there's a basic assumption that fixed costs should remain constant in terms of total and variable costs should remain constant in terms of per unit. Yes, if these assumptions are followed, only then high-low method is applicable. Otherwise, high-low method is not applicable. So we had one such question where you were given total cost of one level, total cost of other level, say year 1, year 2, but they said that during year 2, there was, say, some savings in fixed cost. But if there is a savings in fixed cost between both the years, then high-low method will not be applicable. What you need to do is this. What you need to do is you need to reverse the effect of fixed cost change in that total cost, then apply high-low method, and after applying high-low method, then later the fixed cost change will be reapplied. We had done that in classwork question number 6. Just reconfirm. Yeah, we've done that in classwork question number 6. You can go to your books and refer to that question. This was the rule we had learned in classwork question number 6. Right now, you just remember that not only in this question, rather in any question, if at all the fixed cost is changing, then do not blindly apply high-low method. First, you reverse the change in fixed cost, then apply high-low method, and after applying high-low method, you have separate variable and separate fixed cost. That change of fixed cost you now apply only in the fixed cost now. Done? Yes? Okay. Note number 6, I say that PV ratio percentage changes only if selling price per unit or variable cost per unit changes. It does not change because of change in units. Whether I produce 1 unit or 10 units or 100 units or 1000 units. No matter how many units I produce and sell, PV ratio is a percentage, means the same. It will change only and only if selling price per unit changes or variable cost per unit changes. Done? Yes. Again, look, these are all the things revision from your inter level only, but these are certain common mistakes that students do. Hence, I have given you notes regarding that. Yeah. Note number 7, with increase in sales units, BP units, BP rupees remains the same. If my break-even point is 500 units, my total sales is 700 units. It means that out of total sales of 700 units, first 500 units is break-even point. Now if my total sales becomes say 2000 units, now if my total sales becomes 2000 units, then what is break-even point in that 2000 units? What is break-even point? Well, break-even point will be same 500 units. BP units, BP rupees obviously will remain the same, but naturally BP percentage will change because it is percentage of total sales. Total sales is now becoming 2000. So my BP percentage means out of 2000, what percentage is BP? Done? Yes. So BP units, BP rupees always remains the same. BP percentage will keep changing when the units are changing, when the sales units are increasing. Done? Yes. Okay. There were some general notes regarding the CVP analysis. Now some advanced CVP analysis that we had learned. First advanced level we had learned was regarding shutdown point. Shutdown point is that level of sales below which it is better to shut down the business temporarily rather than continue with higher losses. That was how we defined. Is a level of sales below which it is better to shut down the business temporarily. Yes, be careful. Shutdown point is about temporary shutting the business. Maybe during off season I shut down the business so that after the off season I will still restart the business. It is not permanent liquidation of the company, rather it is a temporary shutdown. Yeah. So shut down temporarily rather than continue with higher losses. It is a level of sales below which my loss if continue will be more than loss if shut down. Remember, the entire story about shutdown point will come only and only if there is some avoidable fixed cost given in the question. Meaning, out of my total fixed cost, there has to be some portion of the fixed cost which is avoidable when I shut down. Only then the entire principle of shutdown point will come. Otherwise, shutdown point does not exist. We had done an entire derivation. We had understood the entire derivation of this formula in class. I will not revise the derivation. Let's just revise the formula. To calculate shutdown point, you can do that by formula method. Shutdown point is avoidable fixed cost divided by contribution per unit or divided by PV ratio percentage. Same rule applies. If I divide per unit contribution, then my shutdown point answer will be in units. If I divide percentage contribution, that is PV ratio, then my shutdown point answer will be in rupees. Done? Yes. So chalo, this was by formula method where I take avoidable fixed cost divided by contribution per unit or PV ratio. Now what is this avoidable fixed cost? Well, for avoidable fixed cost, I give you this rules that avoidable fixed cost is the total fixed cost when I continue. If I continue business, what fixed cost do I incur? That is my total fixed cost minus fixed cost after I shut down. Because look, after my company shuts down, I have a temporary shutdown in my company, then during the month of shutdown, I will incur some fixed cost. Maybe not the entire fixed cost, but some portion of that fixed cost I will still continue to incur. That is my fixed cost if shut down. And the difference of these two will be the fixed cost which I avoided because of shutting down. The total fixed cost of continuing minus the fixed cost after shutdown will give me that difference. Difference is the fixed cost which is avoided because of shutting down. That is called as avoidable fixed cost. Done? Yes. Okay. Total fixed cost if continue includes all the regular fixed costs. Plus, it will also include the cost of reopening, training, repairs, etc. Because look, after shutting down for a few months, then when I restart, I might have to incur cost of reopening, cost of retraining the employees, cost of repairs. Isn't all that incurred because of shutting down? Yes, so that should also be part of my avoidable fixed cost, because if I did not decide to shut down, then this cost would also be avoided. Yeah, so my total fixed cost will include cost of reopening, training and repairs. If the estimated level of operation is more than shutdown point, then continue, otherwise shut down. Now this is the rule. This is the rule regarding how to use the concept of shutdown point. How to use that concept? I use the concept like this, that if my estimated level of operation next year is more than shutdown point, then I continue. Is less than shutdown point, then I should shut down. Look, naturally, will I shut down my business if my sales is estimated to be very good? No. You will think of shutting down only and only if your sales is estimated very less. Less than what? Less than shutdown point. Yes, if you estimate very good sales in the next few months, definitely you will not shut down. If you estimate very less sales in the next few months, maybe due to off season, slack season, then for that many months you might decide to shut down if your estimated sales is going to be very less. Very less means less than what? Means less than the shutdown point. Yes. Okay. This was calculation by formula, by calculating the shutdown point. Or you can also decide shutdown by comparison. Simply compare two different options. Two different options you compare, that what will be the loss of the company if it continues, what will be the loss of the company if it will shut down. If continuation gives more loss, then it is better to shut down. If shutdown gives more loss, then it is better to continue. Done? Yes. So in class we had done certain questions by formula method, and later in the chapter, later in the chapter, we also did certain questions which was by comparison method. Done? Yes. Okay. That is regarding shutdown point. Okay, then further we have discussion regarding advanced CVP analysis. Within advanced CVP analysis, the first one, multi-product break-even point. Remember, we had done certain questions about this. When is this method applicable? Well, look at the first condition. This method will be applicable when my company is having more than one products, because each product will have different contribution per unit. Yes, so this method is applicable when we have multiple products, each having a different contribution per unit, but the fixed cost of the company is common fixed cost. So we do not have a separate fixed cost in every product, rather there is a common fixed cost and contributions are more than one. In such case we need to follow the method of multi-product break-even point. Well, later for my explanations, I redrafted the name of this method and said that multi-product BEP method is basically nothing but ratio method. Ratio method to calculate the break-even point. Why? Because in this case, when there are more than one contributions per unit and the fixed cost is common, but all these contributions can be earned together, all the products can be sold together. Yes, so in such case, for calculating a break-even point, my break-even point depends on which product is sold. Which product is sold depends on the ratio of the sales experience given in the question, ratio of your past sales experience. Well, unless this ratio is given, you cannot solve such questions. Yes, and when the ratio is given, how to use that ratio? Well, for that, rule 13 and 14. If the ratio given is ratio of sales units, then you start calculation by assuming, yes, assuming a number of units equal to the ratio given. And if the ratio given is of sales rupees, Then you start calculation by assuming value of sales equal to the ratio given. Yes, so if you had products like XYZ, you had a contribution per unit for each product, then you assume number of units in each product. Number of units you assume same as the ratio given. Yes, and accordingly you calculate total contribution, add them up, get the overall total contribution, and then cross multiply. I hope you remember what we had done in some questions like that. I can give you question reference. We had done that in question number 12. These things we had done in question number 12. Yes, so once you have this total contribution, you just have to cross multiply that this total contribution comes from these total units. Then for total contribution equal to fixed cost, how many units will you need? Done. Yes, in short, the crux was that if ratio given is ratio of units, then you start by assuming number of units equal to the ratio given, and if ratio given is ratio of sales rupees, then you start by assuming sales rupees as the number of as the ratio given. Done. Yes. Okay, later we had some variation of this question. One variation in this question was that if there is shortage of available units in any one category, like say after calculating break even point, here you got the overall break even point, you split that between XYZ in the ratio as given. Now after splitting, if I get a break even point in XYZ as, say for example, 10 units, 20 units and 30 units, but the number of units available in, say, X and Z, or say number of units available in X, if the number of units available in X is only, say, 8 units, so you see there is a shortage of 2 units. I need to sell 10 units of X to reach break even point, but available units is only 8. So 2 units of X is the shortage. What to do in such case? Well, in such case, first calculate the contribution lost due to the shortage. How many units of X are shortage? 2 units shortage. For that 2 units, you identify that how much contribution will you not recover. For that 2 units of X, I will lose contribution per unit of this much, and this contribution lost has to be recovered by selling units of the other available category. So these contribution lost, you need to recover that lost contribution by selling units of another available category. If there are two categories available, you give two answers. You give two answers that either you sell extra units of Y or you sell extra units of Z to recover that lost contribution. That will become your final break-even point then. Done? Yes. Well, that we had done in classwork question number 17. I've written the question references here so that it will be easier for you to keep a track of it. Done. But consider this list of rules that I have given. This is like your summary notes. So once you have done those questions, it will be easier for you to revise that over here. Done? Yeah. Next advanced level was BP with opening stock. Well, if I give you opening stock in the question, then during the year when I sell the units, either I will sell opening units first, then I will sell units of current year, or I sell current year units first, then I sell units of opening. So in that case, my BP calculation might also be different. Yes, so if opening stock is given in the question, then fixed cost is first recovered from the units which are sold first. Naturally, the units which are sold first are the units which will give you your first contribution. This contribution goes towards recovering the fixed cost. But which units will be sold first? Well, that depends whether you follow FIFO, LIFO or weighted average method. In case of FIFO method, opening units are sold first. In case of LIFO method, current year units are sold first. In case of weighted average method, both are sold together. Mixture is sold. I hope you remember the concept about mixture. Yes. Now, how to calculate BEP then? Well, fixed cost is first recovered from the units that are sold first. Then remaining fixed cost is recovered from the units which are sold next. In short, here I gave you a method that fixed cost is recovered stepwise. Stepwise. So step 1, you recover the fixed cost from the units that are sold first. Then you find the balance fixed cost to be recovered. Then balance fixed cost is recovered from the units which are sold next. For example, if FIFO method is followed, if the question tells you to follow FIFO method, then this is how you start. You start with the total fixed cost minus the fixed cost which will be recovered from the sale of opening units. From the sale of all the opening units, whatever fixed cost is possible to recover that first. Then the balance fixed cost, if any, has to be recovered from the sale of current year units. Find the number of current year units you need to recover that balance fixed cost now. Done. That was my BP with opening stock. This method, I gave another name to this method. I named this as the stepwise method. Earlier one I called that as ratio method. This one I call this as stepwise method. And now I give you some more applications of both these methods. Ratio method is applicable, yes, when there are multiple products, agreed, but it is also applicable in some other situations. Similarly, stepwise method is applicable when there is BEP with opening stock, but no, it is applicable in some other situations also. So now the comparison that I give you here is to make you aware of other situations where same method might be followed. Like ratio method is always followed whenever there is more than one contribution, but the fixed cost is common and all these contributions are earned together at the same time. Now, because all the contributions are earned at the same time, hence ratio has to be given. Because if all contributions are earned one after another, then I don't need a ratio. If all contributions are earned together at the same time, then I need a ratio that how these contributions will be earned. Yes, this is the main difference. Ratio method and stepwise method, both of them require that there are more than one contributions. Dekho, both places, both of them need that fixed cost is common. Yes, fixed cost is common at both the places, but the difference is that ratio method is applicable when all these contributions are earned together at the same time. Because they are earned together, ratio has to be given. And if all these contributions are earned one after another stepwise, like first I sell opening units, then I sell current year units stepwise, then you have to follow the stepwise method. In such case, ratio is not needed. So imagine for FIFO method, LIFO method, you can follow stepwise method, ratio not needed. But in case of weighted average method, opening units and current year units both are sold together. If both are sold together, then both contributions are earned together. Ratio has to be given. Yes, okay. So in this case, ratio of the sales must be given. So you have to follow ratio method. We did that in question number 12. While over here, when contributions are earned one after another, ratio is not needed. Then stepwise method is followed. We did that in question number 13. And other examples for the same. Other examples for the same can be like this, that multi-product BEP, yes, we follow ratio method. BEP with opening stock, when a weighted average method is asked, yes, again a ratio method. Why? Because under weighted average, opening units, current year units are sold together. Yeah. And when there is BEP with opening stock under FIFO method, LIFO method, you need to follow stepwise method. Or maybe some situation where initial units are sold at a discount, then later units are sold normally. But don't you think that in this case also initial units will have different contribution, later units will have different contribution, and both these different contributions, are they going to be earned together? No. First you will earn the contribution of discounted units, then you will earn contribution of regular units. So naturally here again my different contributions are earned one after another. You need to follow the stepwise method. Done? Yes. Further, Next, we had one question regarding merged plant break-even point. If the plant, if my company is having three different factories and I plan to merge the factories together, and after merger, I ask you to find break-even point, then that is called as merged plant break-even point. How to find that? Well, follow this rule. If the plant capacities are merged, then to find BEP of the merged plant, first you find the basic data of the merged plant. Like you need to know that after merger what will be the fixed cost, after merger what will be the contribution, what will be the PV ratio. Yes, well, after merger what will be fixed cost? Well, it is simply summation of all the individual fixed cost. But after merger, what will be contribution per unit? It cannot be simply addition, because after merger what will be contribution per unit, what will be PV ratio? Well, to do this, you first convert all the individual plants into 100% capacity, then add their data to get the data of the merged plant. Yes, this was a simple rule. I need you to just remember that whenever I ask you to merge the plant capacities, look, what you are merging is the capacity of the individual plants. You are not merging the present utilization of the merged plants. If I have plant A, plant B, plant C, presently they are working at say 60, 70, 80%, then I'm not merging 60% of plant A with 70% of plant B. No, when I merge the plants, it will merge not the running capacity, it will merge the full capacity. Yes, so first you convert each individual plant into 100% capacity, then add their data to get the data of the merged plant. Now that you have the data about the merged plant, you can calculate anything from that data now. Done. That was your merge plant break-even point. Indifference point. Now this was very important and it had many implications. Indifference point, if you remember, I had given you example about buying petrol car, diesel car. I'll just mention that here. Example of buying petrol car versus diesel car. And in that example, we learned that in case of one option, your fixed cost will be more. In case of other option, your variable cost might be more. Like in case of petrol car, diesel car, if I choose a diesel car, then my annual fixed cost will be more. Maintenance is more, cost of the car itself is more, depreciation is more. But if I choose diesel car, then my variable cost per unit will be less. So with respect to fixed cost, petrol car is better. With respect to variable cost, running cost, diesel car is better. Well, in such case, how to decide which car is overall better? Well, which car is overall better depends on your usage. You know that if your usage is more, then it is better to go for diesel car. Why? Because when your usage is more, then you choose an option in which your usage cost is less. Usage cost means the variable cost. Yes, so when your usage is going to be more, choose the option where your usage cost, variable cost is less. Agreed. But this is still ambiguous. I say that when your usage is more, you go for diesel car. Usage is more than what? More than what? More than indifference point. So indifference point is used to decide that what should I consider as more usage. Formula was like this. Indifference point is difference in fixed cost total divided by difference in variable cost per unit. Fixed cost that I take will be in terms of total, matlab annual fixed cost divided by difference in variable cost per unit will give me indifference point. What is the use of this? Well, this indifference point is now used for selection of the option. If my usage is more than indifference point, then choose the option with higher fixed cost, or I can say choose the option with lesser variable cost. Like I said, if my usage is more, then choose the option with lesser usage cost. Usage cost means the variable cost. Yes, so if my usage is more than what? More than the indifference point. If my usage is more than indifference point, choose the option with lesser variable cost, choose the option with higher fixed cost, because higher fixed cost is affordable only if the usage is more. Done? Yes. Now we also did situations where there were three indifference points. There were three options given. If there are three options given in the question, well, then there will not be three indifference points. If there are three options given, this is what you do. If there are three options given in the question, like for example, petrol car versus diesel car or versus taxi option, then step one, I say that you arrange all options in the increasing order of fixed cost. In case of taxi, I have zero fixed cost. Petrol car fixed cost is there. Diesel car fixed cost is more. So I arrange the options in increasing order of the fixed cost. Then calculate. Okay, one mistake here. Then calculate, not fixed cost. Calculate indifference point. I'll make the correction in the link below. But in the video, I'm not having the correction. Okay. Then calculate indifference point between only between the adjacent options, meaning you calculate indifference point between option 1 and 2. There's 1 and 2. You calculate indifference point between option 2 and 3. Do not calculate indifference point between option 1 and 3. Why? Because there is no use of it. There is absolutely no use of calculating indifference point between a taxi and diesel car, because petrol car option is existing. If the middle option does not exist, if that middle option does not even exist, then there is use of indifference point between option 1 and 3. Done? Yes. Okay. That is regarding all discussions pertaining to indifference point. Further, break-even point with semi-variable cost. Semi-variable cost over here is the one which is a batch level cost. Batch level cost meaning this cost does not increase with increase in every single unit. No, this cost increases with increase in group of units, batch of units. For example, I think I might have given you the same example earlier, that we are planning for a picnic, and we'll be taking the students in buses to the picnic. Bus has a fixed rent of one bus is something fixed, say 1000 rupees per bus is the bus rent. But that bus rent, although it is fixed amount of rent for each bus, it is not a fixed cost. It becomes a batch level cost. Why? Because in case of this bus rent, you will have to pay the bus rent for as many buses you take. Number of buses you take depends on the number of students. Do you take one extra bus for every extra student joining? No, it depends on the bus capacity. Say if the bus capacity is, for example, say 50 students. If the capacity of my bus is 50 students, meaning for every 50 students extra, I will need an extra bus. In short, batch level cost means the cost which increases for increase in group of units, not for increase in every single unit. Now, if you are given any such fixed cost in the question which increases with group of units, then how to calculate break-even point? Look, for break-even point, generally your break-even point used to be fixed cost divided by contribution per unit, and that contribution per unit was equal to selling price minus variable cost. So this means that for calculating a break-even point, all my costs have to be segregated between either variable cost or fixed cost. Here I have a new item of cost called semi-variable cost. What to do? Well, in class I had given you two methods, but now I am teaching you, I am revising only method 2, which was the faster method. Remember this. What you need to do is, first step, consider SVC, semi-variable cost, as variable cost. and convert it into per unit. Now calculate contribution per unit using this SVC per unit. So now my contribution per unit, now this contribution per unit will be selling price per unit minus variable cost per unit and minus semi-variable cost per unit will give me contribution per unit. Now using this contribution per unit, you calculate BP using this contribution, but this BP is not the final answer. This BP is my approximate BP. In fact, in class, I had given you a full derivation to convince you that this BP is basically minimum BP. That bare minimum, my correct BP will definitely not come below this level. This is minimum this much units I will definitely need to recover my all the cost. So this becomes my minimum BP. Correct BP will definitely come above this BP level. This was what we had learnt in method 2. Now this method 2, you see that it does not give me the correct BP, but it at least gives me a logic that my correct BP will definitely come above this minimum BP. Now that you have the minimum BP, now you consider SVC as fixed cost. Change kiya dekho. Now I say that consider SVC as fixed cost and then find BP by trying batches above this approximate BP. Now you find the correct BP by trying batches above this minimum BP, and you have to follow trial and error method. Yes, this trial method I had taught you in question number 22. Yeah, question number 22 is the one where we had started learning the SVC BP with SVCs. So if you still need help, please go back to that question to revise. Now, what we learned here is that because of semi-variable cost, you had to follow trial and error method. Acha, let me also remind you how did we do that trial method. Trial method simply says that I try different options. I try that if I take one bus for the picnic, then what is the fixed cost, what is break even point? If I take 3 buses for the picnic, then what is fixed cost, what is break even point? If I take 4 buses for the picnic, what is fixed cost, what is break even point? You keep trying various options, and you remember that in such case you might get more than one break even points. Let me mention that here also. You might get more than one break even point, more than one correct BP in the answer. Yes, then each of that correct BP you have to mention as answer. Done? Yes. Okay. Now, why did we follow trial method here? Well, here we followed trial method because my fixed cost is not sure. You are not sure that how much will be exactly your fixed cost. It depends on number of buses you take. Similarly, when you are not sure about any factor of BP, you follow trial and error method. For example, if you are not sure of the selling price, if you are not sure of the variable cost, if you are not sure of the fixed cost, then in all such cases you follow this trial method. Well, that we learnt in question 24, that you follow such trial and error method whenever any factor of BP is changing. If selling price is changing, say for two different set of units, if a variable cost is changing for different set of units, if the fixed cost is changing for different set of units, then in all such cases you create a separate trial for every such change, create a separate trial for every such change, and find BP of each such trial separately. Well, that you might need to refer question 24 for that. Go to question 24, refer that question for this. Done? Yes. Okay. Next, you had one last part here regarding CVP analysis with normal distribution. Normal distribution, if you remember that we had learnt a graph like this. Oh, We had done a graph like this where we called this as the normal curve. I hope you remember. This was basically regarding probability. This was your x-axis, this was your probability of x, and this graph was basically to identify probability. Yeah. So generally, in such case, the question is to find probability using normal distribution. First, you find out the factor which follows normal distribution. Be careful, in such cases, the question will specifically tell you that what follows normal distribution. It might be, the question might tell you that units follow normal distribution, or the question might tell you that sales rupees follow normal distribution, or the question might tell you that the profit rupees itself follows normal distribution. Whatever, notice that clearly, that what factor follows normal distribution. Say generally it will be the units that follow normal distribution. Now what does that mean? It means that the probabilities given in the question are the probabilities of the units. That probability of this much units being sold is this much. Probability of this much units being sold is this much, and so on. So the probability distribution given will be generally the distribution of units. So if units follow normal distribution, then you find the units required to reach the target profit. This will be your question. Your question will be that what is the probability that my profit will be more than this much? For example, if I ask you to find probability of profit more than 40,000, meaning it can be expressed like this: probability of profit more than 40,000. Now if I want probability of profit more than 40,000, this is the probability which I need to find, P of profit more than 40,000. Well, if I want probability of profit more than 40,000, I need to first convert that profit required into the units required, and you can do that by using output equals to F plus P upon contribution per unit. That for 40,000 profit, how much units are required? Why did I convert the profit required into units required? Well, you need to convert that because because in this question units follow normal distribution. Yes, so profit required, convert that into units required. Units means x, and that x you need to convert into z. For that, this was the formula under normal distribution, that z equals to x minus mu by sigma. Mu is the average units sold, sigma is the standard deviation of the units sold. Both of that has to be given in the question. Yes, so if units follow normal distribution, then first you find the units required to reach the profit required. Now convert these x units into z, and once you have the z value, probability of z, pz, is identified from the z tables given. I had taught you in class how to analyze the z table. Yes, if you don't remember, go to that classwork and you'll see there how to identify the z tables. Z tables might be given in the exam, or most likely what I would predict is that instead of giving you z tables, they will give you probabilities of various z values in the question. You choose which value will you use over here. And remember, all the z values given in the z table, all the z values given in the z table will be the z values starting from the origin. So if I give you the value of z equals to 3, I give you the value for z equals to 3, meaning it is from the origin towards this side here. If I give you value of z equals to minus 1, then meaning it is from the origin here until z equals to minus 1, and so on. Done? Yes. Okay, that was a CVP analysis with normal distribution. Well, all this was regarding CVP analysis. Most of that was from your intermediate level. Few things like this was extra added in the final level. Done? Yes. Okay. Now, my next part is now completely new. It is for the final level only, that is relevant costing. We had done many questions regarding relevant costing, and these principles regarding relevant costing are applicable at many other places also. Not only in a relevant costing chapter, the same principles you remember were also applicable in transfer pricing chapter. Yeah, so be more careful with that. What does relevant costing mean? Well, relevant cost means expected future cost that differ under different alternatives. All the variable cost need not be relevant, all fixed costs need not be irrelevant. For example, for most of my discussions in relevant costing, I might have given you this example that I am doing some production, I'm manufacturing a product, that is my regular production. Let me call this as my routine production, regular production. Now I am getting a new order to do some new production, extra units of the same product or maybe some new product. So in short, my regular production is as it is, plus I am getting a new order for some extra production. If I am getting some new order for some extra production, for this new order, what extra cost I incur becomes the relevant cost. So generally for any such new order, you will definitely incur extra variable cost. So generally, extra variable cost incurred for extra units is always relevant. And generally for any extra order, I do not incur extra fixed cost because fixed cost does not depend on units. So generally for any such extra order, new order, I do not incur any extra fixed cost. Hence, the general notion is that for any such new order, my variable cost will become relevant, fixed cost becomes not relevant. But the first sentence here, I'm changing it all. Because depending on the situations, depending on what is the new offer, it might happen that all variable cost need not be relevant. All the fixed cost need not be irrelevant. For example, what if my new offer is not to produce any extra units? My new offer is to change my current method of production. My new offer is to change my current method of production. So my number of units remain the same. Presently, I am producing them manually. New offer is to produce them with automatic machines. So my number of units will still remain the same. But now for this new offer, what is relevant, what is not relevant? Well, now in this new offer, if I'm just changing my method of production, then I might incur some extra fixed cost to do that. I was doing the work manually till now. Now I plan to do it using some automatic machines. Then the cost of the machine will increase my fixed cost. So yes, I will incur additional fixed cost will become relevant. Yes, but maybe after the new machine, my material consumption will still remain the same. Material consumption, variable cost, but it still remains the same. So it is not relevant. In short, what is relevant cost? Relevant cost means any future cost that will differ under different alternatives, which will change with the change in alternative. Variable cost, it might be variable cost or it might be fixed cost. Variable cost might change under different alternatives. In some cases, even fixed cost might change under different alternatives. We'll have to see that in case to case basis, question to question basis. Yeah. Now, two important terms which are repeatedly used here: sunk cost and opportunity cost. Sunk cost means the cost which is already incurred. Already incurred means you have already paid the money. पैसा गया, डूब गया, भूल जाओ उसको. Learn to let go. Yes, this is what I had told you there, that the money that you have already paid, already incurred, it is not relevant in decision making because you have already paid that money. Learn to let go that money. Yes, while opportunity cost is the income of the next best option that is sacrificed. Look, opportunity cost is not actually a cost, it is an income that you sacrifice. You could have got this income, but you chose some other option due to which you are losing this income, you choose other option due to which you are losing this income, then that income becomes your opportunity cost. And yes, it is relevant for decision making. Yes. However, remember this, opportunity cost will exist only if another opportunity is given in the question and that opportunity is sacrificed. Like if I tell you that after completing CA you get into a job. Now if you take up a job, so does it mean that you are losing the opportunity of earning profit in any business? No. Why? Because I didn't give you a business option here. Now imagine, what if you are coming from a very wealthy business family, your father has some reputed business running a company. When you finish your CA, then now instead of joining your father's company, you take a job in some another company, meaning you are sacrificing your business option and going for a job. If that option of business is existing, only then it becomes your opportunity cost. Yes, just because you are choosing another opportunity does not mean something will become opportunity cost. No, it will be opportunity cost if that opportunity exists and that opportunity is given in the question. Done? Yes, only if that opportunity is given in the question, then you take that as opportunity cost. We had learned that in some questions, some of you had doubts regarding why did I not take this as opportunity cost. Well, it was not taken as opportunity cost because question did not give me that opportunity. Done? Yes. Okay, so sunk cost and opportunity cost. Do remember, sunk cost never relevant in a decision making because this is chapter over. You've already paid that money and you know that this money is not going to come back. It will not come back. Don't wait for it. Learn to let go. Yeah. While opportunity cost is an opportunity that you have missed. You could have taken that opportunity, but you are now thinking to take another opportunity. So this becomes your relevant cost. Done? Yes. Very important. It is used at many places. Next, we have some rules of relevant costing. Now, if you remember in class also, during my classes also, first I had explained you the same rules, and based on these exact same rules, we solved many questions. I'll just give you a recap of all the rules over here. Rules for relevant costing. Under that, first is my relevant cost of materials. In case of materials, 5 rules I have made here. If the material is not in stock, it is specially purchased for the new offer, then the current purchase price itself becomes a relevant cost. Yeah. If the material is in stock and it is regular in use, if this material is used in new offer, so if my new offer requires a material which is in stock and regular in use, then relevant cost is again current purchase price. Look, the original purchase price of this in stock material is not relevant. Why not relevant? Because original purchase price was already paid earlier. It becomes your sunk cost. Yes. So this material which is in stock, although it is in stock, my relevant cost will be the current purchase price. Why current purchase price? Because if I consume material from the stock, then for my regular use, I will have to purchase fresh material. If I consume material from the stock in a new offer, then for my regular use, I'll have to purchase more material. That current purchase price will therefore become relevant cost. Done? Yes. Okay. But during this entire process, if there is any contribution lost, if any, like I consume material from stock for new offer, because this material was used in a new offer, due to that my regular production got affected and my regular production had some contribution lost, then this lost contribution from regular product has to be recovered from the new offer. This contribution loss from regular product has to be now recovered from the new offer. So that contribution lost is also added to the relevant cost of new offer. Yes. Next, if the material is in stock but not in regular use, maybe it is kind of obsolete material. So think, if my new offer requires some old obsolete material, which is anyways not used in regular work, and I can use that in the new offer, then basically relevant cost will be zero, because anyways I did not have any other use of this good that it is getting used up in the new offer. The only other use which I had for this obsolete material was what? Well, the only other use for this obsolete material was to sell it for scrap. The scrap value I could have got, but because of new offer I will lose the opportunity of getting this scrap value. Yes, I will lose opportunity of getting this scrap value because of the new offer. That is why I call that as opportunity cost, and the scrap value I call that as NRV, net realizable value. Well, net realizable value, the word net indicates that if I incur any cost for earning that scrap value, then that cost has to be deducted. Yes, the word net indicates that it is a scrap value minus any cost incurred to get that scrap value. Yes, maybe the removal cost, maybe the disposal cost, whatever, that scrap value minus the cost will give me the net realizable value, which is basically an opportunity cost. Why do I call this opportunity cost? Because if new offer is not accepted, then this obsolete material would have been sold for scrap and you would have earned the scrap value. You are sacrificing this income because of the new offer. Hence, it becomes opportunity cost. Done? Yes? Okay. This was regarding obsolete material. Now I have two more rules regarding some further adjustment pertaining to that obsolete material. Like, if this obsolete material has any other alternate use, some other alternate use is there. Well, if this obsolete material had another alternate use, then also my relevant cost is the same. It is same, it is still opportunity cost. Think of this, my relevant cost is still opportunity cost. Only difference is now that the opportunity has changed. What opportunity did I have here? Here I had the opportunity of selling it for scrap value. Now I have two opportunities. Either I can sell it for scrap or I can use it in the alternative use. If I use it at some alternative place, then in that alternate use, I will save something. Maybe I can use obsolete material in place of some other goods so that I can save the purchase cost of that other goods. I repeat, I can use the obsolete material in place of some other goods so that I can save the purchase cost of that other goods. So now, if new offer is not accepted, then for this obsolete material, I have two options. Either I can sell the obsolete material to the scrap dealer, or I can use this obsolete material in some other goods, in place of some other goods. Which option is better? Whichever is higher. If scrap dealer would have given me better value, then I would have given the obsolete material to scrap dealer. If the obsolete material would have given me more savings in other goods purchase cost, then I would have used it in place of those other goods. Whichever is higher, that becomes my opportunity cost. Remember, opportunity cost means the income. Opportunity cost was even defined as income of next best option. Opportunity cost was the income of the next best option. Next best option meaning either option 1 or option 2. Next best means whichever is higher. So basically rule 7 I would say is not any new rule. It is just the definition of opportunity. Rule 7 is in fact same as rule 6, because rule 6 I already told you that for using obsolete material in the new offer, my relevant cost will be the opportunity cost. Either opportunity cost is just the NRV, or opportunity cost might be NRV or net savings of alternate use, whichever is higher. Do notice, for that savings also I am writing the term as net savings, because in order to get that savings if I have to incur some cost, then the savings minus the cost will become the net savings. If this obsolete material is used in place of other goods, then it will save purchase cost of that other goods. Other goods ka purchase cost was 100 rupees. But for using obsolete material in place of other goods, I will have to incur say 10 rupees cost on that obsolete material. Then in that case, my net savings will be 100 rupees purchase cost saved minus 10 rupees cost incurred on this obsolete material. Net savings is only 90 rupees. Done. Yes. So you take net savings just like you take net realizable value here. Whichever is higher, that becomes your opportunity cost. Yes. And rule 8. If the obsolete material has any substitute available. Now when I say substitute, meaning instead of using this obsolete material in a new offer, I can use something else in the new offer. Instead of using this obsolete material in my new offer, I can use something else in that same new offer. Then which one should I use? Should I use this obsolete material or should I use that something else? Well, use whichever has lower cost. Lower cost meaning for obsolete material, you consider opportunity cost of obsolete material just like this. And for that substitute, you can consider total cost of that substitute. Opportunity cost of obsolete material versus the total cost of substitute. Whichever is lower is what I use in new offer. That will become your relevant cost. Done. So if that obsolete material has any other substitute available, then you take opportunity cost of the obsolete material or total cost of substitute, whichever is lower. Done. This covers all the rules regarding material relevant cost. Well, like I said, this is just a revision. We had practiced that in many questions in class. Plus, I had given you one full-fledged example in class. One full-fledged example in which, in that one example, I had covered all the rules here. That example was regarding, say, some new batch of CA coaching that we are planning to start. Yes. Anyways, that I cannot revise in the revision sessions. Rather, we'll just go through the rules over here. Going further, in case of labor, for all questions of relevant costing, you need to classify labor in two categories. Either the labor can be casual labor, which is considered a variable cost, or the labor is permanent labor, which is considered fixed cost. You know, in entire costing subject, by default, in general, direct material, direct labor are assumed to be variable cost. Why is labor assumed to be variable cost? Variable means it depends on units. Do I pay salary to my workers based on units? No. Look, my salary paid to one worker does not depend on units. Then why do I consider labor as variable cost? Well, whenever labor is considered variable cost, it is considered variable cost because number of workers depends on the units. Number of workers which I employ depend on units. If I plan to produce 1000 units in the next year, then I employ 10 workers. If I plan to produce 2000 units in the next year, then I employ 20 workers. Number of workers will vary according to units. That is why my total labor cost is generally taken as variable cost. Done? Yes. So casual labor means the labor which can be removed when you don't have work, and you can hire new labor when you need more work. Hence it becomes variable cost. In case my new offer requires such casual labor, then relevant cost will be the labor cost paid, or labor cost paid plus contribution lost, if any. Like for example, if the new offer will take some casual labor from the market, due to which my regular production gets affected, because if the new offer takes the casual labor, then there is a shortage of labor in the market, due to which my regular production gets affected. If there is a shortage of labor, my regular production will be affected. You will lose contribution in regular production because of new offer. Then that contribution loss has to be recovered from the new offer. Yes. So casual labor, variable cost, if it is available in abundant, then relevant cost is the labor cost paid. If there is a shortage, then it is labor cost plus contribution lost. And when nothing is given, general assumption, when nothing is mentioned, then assume labor is always variable cost, that is this casual labor. You consider labor as permanent labor only if the question specifically mentioned that it is permanent labor or some hint is given that it is permanent labor. Yeah, permanent labor is like a fixed cost. You cannot remove the workers. Well, if I cannot remove these workers, then I have to pay them fixed salary even if there is no work, whether a new offer is accepted or whether a new offer is not accepted. In any case, I have to keep paying them the salary. Yes, so whether the new offer is accepted or not accepted, in any case, I have to pay the same salary to my workers. So tell me, because of new offer, do I incur any extra salary? No. So relevant cost is 0. Now, if that permanent labor were already very busy and now because of new offer, I use this permanent labor in the new offer. Well, if the permanent labor was busy and it was used in a new offer, then they will lose contribution in regular work. So contribution loss has to be recovered from new offer. So let me summarize. If the new offer uses casual labor, then relevant cost will be labor cost paid plus contribution lost if any. So look, it covers both 9th and 10th point. Yeah. And if the new offer requires permanent labor, then my relevant cost will be only contribution lost if any. Done? Yes, this is regarding labor. Next, overheads. Well, regarding overheads, look, there can be two things: variable overheads, fixed overheads. If the new offer is requiring you to produce some extra units, then for producing extra units, you will definitely incur extra variable overheads, but you will not incur extra fixed overheads. I repeat, whenever new offer asks you to produce extra units, then that new offer will definitely require extra variable overheads, but it will not require extra fixed overheads, because fixed overheads does not depend on extra units. Yes, you will incur extra fixed overheads for new offer only if the question specifically mentioned that. See this. If variable overheads are based on labor, then it must be considered even on permanent labor. This was one rule, that generally variable overheads will be as absorption rate. If the absorption rate is based on permanent labor, then look, the permanent labor cost you did not take as relevant. Why? Because permanent labor cost is a fixed cost. But if my absorption rate is based on permanent labor, then variable overheads, when they are based on permanent labor, it will still be relevant, because for extra units you will definitely incur extra variable overheads because it is a variable. Look, permanent labor I did not take because it was a fixed cost. Variable overheads on permanent labor cannot be fixed cost, it is variable. So if the employee is paid a fixed salary and I cannot remove the employee, if I cannot remove the employee, meaning his salary cost becomes a fixed cost for me. But when the worker is not working, will that worker still consume power consumption? No. When the worker is not working, will it still consume electricity? No. So variable overheads is always variable. If the fixed overhead absorption rate is given in the question, ignore this rate. Why? Because fixed overheads is relevant only if the total increases due to the new offer, only if the fixed cost specifically is given for new offer. Yes, any fixed cost is relevant only to the extent it is avoidable. Sometimes the question might tell that new offer, if it is rejected, then my fixed cost of 10,000 can be avoided. Look, ultimately regarding overheads, I can simply say that there are two rules. Chalo, for the time being, forget this. Overheads के लिए only two things. for extra units of the new offer, you will definitely incur extra variable overheads. For extra units of new offer, extra fixed overheads, you will incur only if specifically mentioned in the question. Once again, for new offer, I will definitely incur extra variable overheads. For new offer, extra fixed overheads, I will incur only if specifically mentioned in the question. Now, how will it be given? Either they will directly give you that new offer involves this much fixed cost, or they might give you like this, or they might say that out of the total fixed cost, some fixed cost is avoidable if new offer is rejected. Then that avoidable portion becomes your relevant cost. Why? Because rest of the fixed cost is not avoidable. Not avoidable meaning whether new offer accepted or rejected, unavoidable remains the same. But if new offer is rejected, then the avoidable fixed cost can be avoided. If this fixed cost is avoidable, meaning it was incurred only because of the new offer. It was avoided when a new offer is avoided. It is incurred when a new offer is taken. Yes, so fixed cost relevant is only to the extent that is avoidable. If a department is working at full capacity and this department is required for the new offer, then relevant cost will be variable cost plus contribution lost both. If department P I require for new offer, department P is already working at full capacity. So if I use this department for new offer, then my regular sales of that department will be affected. There will be contribution loss. Then that contribution loss also has to be recovered from the new offer. My relevant cost will be variable cost of that department, variable overheads of that department, plus the contribution lost if any. Done? Yes, this becomes my relevant cost of overheads. Next, relevant cost of machines. Well, in case of machines, I can give you one simplest rule. When my new offer requires some machine, then relevant cost of using this machine in a new offer will be value of the machine now minus value of the machine after using a new offer. Yes, I have given you more rules also under that, but I suggest you just remember this first rule. Value of the machine now minus value of the machine after the new offer. If new offer will take 1 year to complete, meaning value of machine now minus value of machine after 1 year, that difference becomes my relevant cost of the machine. My machine value decreased by this much amount because of the new offer. My machine value decreased by this amount due to the new offer. Done? Yes. So the only thing you need to take is value of machine now minus value after use in a new offer. That value might be the cost, might be market value, whatever value given in the question. Do not take the historical cost, old cost when the machine was originally purchased. Like if the machine is in stock, machine is already in stock but not in use. The machine is already in stock but it is not in use. Then relevant cost of using this machine in a new offer will be the sale value before new offer minus sale value after using it in the new offer. Sale value today minus the sale value after 1 year after the new offer. That difference is my relevant cost of machine. It indicates that because of the new offer, my sale value of this machine reduced by this much amount. Today if I sell off the machine, I could have got 1 lakh rupees. But if I will sell it after 1 year, after using it in a new offer, then I will get only 80,000 rupees. So 20,000 reduction in the sales value happens because of the new offer. Done? Yes. If the machine is newly purchased for the new offer and after the new offer there is no other use of this machine, there is no other use after the new offer, then current purchase cost minus the sale value after use. Again value today minus value after use. Yeah. If the machine is purchased new and then transferred to other existing business, then relevant cost will be the current purchase cost minus the value after use. Whatever is the value after use given, that you will take. Done? Yes. This is regarding machines. And then certain general rules. General rules regarding relevant costing. General rules. Number one, you will identify all relevant costs always on total basis. Never do that on per unit. Whatever new offer is given, for the new offer, you identify relevant cost based on total relevant cost of new offer, not per unit. Otherwise, you might make some mistakes. Yeah. Relevant cost is always identified for the company as a whole, not department wise. Meaning, if I get a new offer in department A, then will the relevant cost include cost of only department A? No. Remember, relevant costing is from the viewpoint of entire company. So because of new offer in department A, if there is extra cost incurred in department B, if there is contribution lost in department B, then all that department B cost will also be added to this new offer. Yes. So if the new offer gives contribution lost in any other department, then that must also be considered. It is not pertaining to only department, it is extra cost pertaining to entire company as a whole. Yeah. Sometimes in some questions, the word current purchase cost, which we used in materials, dekho, this current purchase price might also be called as might be named as replacement cost. Why? Because if I consume materials from current stock, then I will have to purchase more materials and put it in stock. This more materials which I purchase is called as replacement. If I use your material, then I will have to get you replacement of the material, and the material which I get for a replacement will cost me current market price. Yeah. So replacement cost is nothing but the current purchase price. Replacement cost means the current purchase cost. In case of questions based on bankruptcy, we had two questions in class that were based on bankruptcy. Like, I'm making a machine for a customer. Now the customer goes bankrupt. What will I do with this machine now? Well, this machine, I can find a new customer for it. How much should I charge minimum from the new customer? Will I charge the new customer same as the old customer? No. Look, the machine is already made or almost completed. Now when I get the new customer for this machine, what will I want from the new customer is equal to minimum these three things. Yes. Then for deciding the price for new customer, we shall charge the following items. I will charge him the cost of completion. If any completion is required, I will charge him the cost of completion plus the cost of modification if the new customer requests me to do modification, and plus opportunity cost of materials and parts already used in that machine. That is, opportunity cost means scrap value or savings, whichever is higher. Look, if this machine is almost complete and the customer goes bankrupt, then the only option I have with this machine is to sell it for scrap. Now if I find a new customer who is ready to get this machine, what will I want from him? Minimum. Well, new customer will be good for me if he can give me anything more than the scrap value. Yes, new customer is good for me if he can pay me anything more than the scrap value of this machine. If he pays me less than scrap value, I will rather give it to the scrap dealer. If he gives me more than scrap value, then the new customer is good for me. So minimum what I want from the new customer will be that scrap value. Plus, if that new customer wants me to do modification, then I will charge him extra for the modification. Plus, if that customer wants me to complete the incomplete machine, I will charge him extra for that completion also. Done. So for every question pertaining to bankruptcy, your list of relevant costs will be under three categories: cost of completion, cost of modifications that the new customer wants, and opportunity cost of the materials and parts already used in the existing product. Done? Yes. Okay. Well, so this covers almost all possible rules regarding relevant costing. Lastly, there is a combination topic that I have, that sometimes they might ask you variance reconciliation by relevant costing method. Remember, in standard costing we had learnt variance calculation and we had done reconciliation statement, profit reconciliation. Yeah, for that I presume you remember variance reconciliation by marginal costing method. This we had done in chapter 12. Yes, so variance reconciliation by marginal costing method was the one where instead of profit margin volume variance, you were showing contribution margin volume variance, CMVV. What does CMVV indicate? Contribution margin volume variance indicates the contribution lost due to units lost, volume lost. Yeah, it indicates the contribution that you lost because of units decrease. Now, what if in my company there was some key factor? Remember what is key factor? Key factor means a factor which is available in limited quantity. Now, if for example, if material kgs was the key factor in my company, and during the year I have wasted kgs of material. Well, if I have wasted kgs of material, then my material usage variance will be already negative. But now I say that if I have wasted kgs of material, then this material wastage is the reason why my units were lost. Material wastage is the reason why units were lost. So if material wastage was the reason why units were lost, so what I should do is that out of this contribution lost, I identify that how much units were lost because of material wastage. Because of material wastage, how many units did you lose, and on that units how much contribution did you lose. This contribution lost is then removed from CMVV and added to the MUV. In short, first you make variance reconciliation by marginal costing method. Now identify the key factor, either material or labor. If this key factor quantity is wasted, if that key factor quantity is wasted, then identify contribution lost due to the wastage of material kgs. This contribution lost is removed from the CMVV and it is added to the respective quantity variance. It is added to the MUV or LTV from whichever reason, whatever was your key factor. Yes, and then bas that's it. Yes, now we just write analysis that why are we shifting the contribution loss. Look, it is very important to write that analysis. Generally, whenever the question asks you variance reconciliation by relevant costing method, you have to first show variance reconciliation by marginal costing method. So you show that under marginal costing method, my CMVV was say 10,000, but under relevant costing method, out of 10,000 CMVV, out of say 10,000 adverse CMVV, I removed 2,000 and I shifted it to MUV. Why? Because out of 10,000 contribution lost, 2,000 was lost because of material wastage. Remaining 8,000 is lost because of units decrease. Done? Yes, that I need to explain because look, units lost can be considered as the fault of the salesman, sales department. But this wastage of key factor, the wastage of key factor is the fault of production department. So out of 10,000 rupees contribution lost, I can say that 2,000 rupees contribution was lost because of material wastage in production department. That 2,000 I am shifting it from CMVV and putting it in MUV. This is the analysis you have to write. Done? Yes, we've done some questions of that in class. If needed, you can go back to the classwork and revise that. Done? Yes. So this was all about relevant costing. Done? Yeah. Going further now, the other parts of decision making. Okay, so next we discuss about key factor and product mix decisions. First of all, to remind you, what exactly does key factor mean? Key factor means the factor of production which is available in a limited quantity. We also named that as limiting factor. It is the factor of production that is restricting my production. For example, what could be key factors? Well, the most common examples that we had done in class involved that key factor could be the kgs of material, or it could be hours of labor, or maybe machine hours, etc. But these were the most common examples of key factor. What it means? Well, if kgs of material is the key factor, meaning the total kgs of material available in the industry is limited. So whatever I produce, I have to keep my production within the available quantity of material kgs. Yes. Now, sorry. In such case, your question will be what? Your questions will be regarding deciding that what products should I produce with this limited material quantity which I have. With the limited quantity of material that we have, what production will I do? Which units should I produce? Now, the question about product mix decision will come only and only when two things, two conditions. Number one, there is a key factor, and number two, my company has more than one types of products. I repeat, there is one key factor and there are multiple products. So I need to decide. In such case, I need to decide that which products should I produce using the limited key factor. Yeah. Well, for that matter, these were the basic steps in deciding that. In deciding the product mix meaning how many units of product A, how many units of product B, how many units of product C, how many units of which product should I produce, that was called as product mix decisions. Yeah. And for that matter, these were the steps. Number one, calculate contribution per key factor, and do ranking of all products based on that. Look, now if there is a key factor in my company, then will I consider that the product which gives more contribution is a better product? No, more contribution is not a criteria here. Rather, better product is the one which gives more contribution with least use of key factor. Well, that is why I tell you to calculate contribution per key factor. If kgs of material is the key factor, then you find a contribution per kg. If labor hours is the key factor, then you find contribution per labor hour. Yes, this is called as contribution per key factor. And based on this contribution per key factor, you do the ranking of all products. Ranking. Now allocate the total key factor to these products in the sequence of ranking. So first you allocate the limited kgs to rank 1, then you allocate the limited key factor to rank 2, then rank 3. In the sequence of rank, you keep allotting the key factor. But in every product, you will allot the key factor up to the maximum demand of that product. If product A has the highest contribution per key factor, then does it mean entire key factor I will give to product A? No, because product A does not have so much demand. I will allot key factor to product A until its maximum demand. Then I allot the key factor to the next rank. Again, next rank I allot up to its maximum demand. Then I allot key factor to the third rank and so on. Done? Yes. Step 3. Convert this key factor allotment into units allotment so that you get the product mix. Yes. So if I allot 10,000 kgs to product A, you convert that 10,000 kgs into units of product A by considering that 1 unit of A requires how many kgs. Accordingly, 10,000 kgs of material allotted to product A will give you how many units of product A. That units will become your answer to product mix decision. Done? Yes. Aja. if any minimum commitment is given for any product. Maybe in some questions you are given that this product minimum this much units you have to make. That is called as minimum commitment. We had done such adjustments in many questions. If minimum commitment is given for any product, then first allot that minimum commitment, then allot remaining key factor based on the ranking. So if at all any minimum commitment is given, first you allot the key factor to the extent of minimum commitment. Sabka minimum commitment you fulfill first. Then the balance key factor you allot based on ranking. Done? Yes. Okay. These are the basic steps. Some more dekho. If any unsuitable key factor is given, you also had adjustments where some key factor was unsuitable to some product, meaning this key factor is suitable to only few products. So if there is any such unsuitable key factor, then first allot the unsuitable key factor to the products where it is possible. Then you allot the remaining key factor. Now the remaining key factor is a common key factor, a general key factor. It is suitable to all products. Yes. So first you allot the unsuitable one among the products where it is possible, where it suits, and then the remaining key factor you allot based on ranking. Yes. If maximum demand is not given in some product, if there is no upper demand given, imagine if product A is rank 1, best product, but there is no maximum demand of product A given. Well, if product A does not have any maximum demand, then what will happen? Then entire key factor, then entire key factor will be given to the best product only. Well, if entire key factor is given to that best product, say product A, meaning we will produce only one product then. Naturally, then the question is not a question of product mix decision. There is no mix involved because there is no maximum demand. No maximum demand, then all the key factor will be given to one best product only. Done? Yes, these were various such situations we had done in many questions. I have just compiled them together into these rules or into these notes that I have given you here. Done? Yes. Okay. Some extra adjustments. Well, in case of key factors, there could be extra adjustments like this. For example, I might give you extra key factor. For example, overtime or maybe extra material available from new supplier. Yeah. So if any such extra key factor is given, then how will you answer your question? First, you answer the question out of the regular key factor. Ignoring the extra key factor, you make your answer first regarding the routine key factor. Now for the extra key factor given, you follow these steps. What steps dekho? Use the extra key factor for the product in which demand is still unsatisfied after the basic allotment. Look, if I give you extra key factor, for example, normally 10,000 labor hours are available in the company. But if I work overtime, then I can get extra 5,000 hours of overtime. Overtime extra 5,000 hours. Now where should I use this extra 5,000 hours? It can be used only on that product in which the demand is still unsatisfied. Because look, my original 10,000 hours was already allotted between my products. After that allotment, if any product has unsatisfied demand, then I can use overtime only for that unsatisfied demand. Yes, so this extra key factor will be used for what? It will be used for the product in which demand is still unsatisfied. Okay, but if there are more than one such products where demand is unsatisfied, if there are more than one such products where demand is unsatisfied, then you need to follow trial and error method. Yes, then you need to try. Don't go by ranking, because for the extra key factor, the ranking might not remain same, because for extra hours of overtime, your labor cost will change, so contribution will change. In fact, you might also incur extra fixed costs for the extra time. So better you go by trial and error method. So you try using extra key factor for all such products where demand is unsatisfied. So if in my company product C, product D, both the products have unsatisfied demand, then I try using the extra key factor for producing product C, for producing product D, whichever gives me better profit, that product I should make. Done? Yes. So try using extra key factor for both. Finally, choose the one which gives extra profit, in which the extra profit is maximum. Done? Yes. Extra key factor must be used only if it gives extra profit. So for every such question where extra key factor is given, you first find out from the question that how much key factor is there extra. Secondly, you identify that which are the products where demand is unsatisfied. If there is only one such product, calculate extra profit of extra units in that product. If there are more than one such products, then you calculate extra profits by using extra key factor in each of those products. Done? Yes, whichever gives me highest profit, that is the product I should make in extra time. If none of them give me profit, then I should not use the extra time. Done? Please be careful. If none of the extra production gives you extra profit, then do not choose the option having the least loss. No. If all the options are giving you loss, then your decision will be that extra key factor should not be used. Why should you work overtime when overtime will give you extra loss? Done? Yes. So extra key factor is used only if it gives extra profit. Yeah, we had practiced that. All these things so far what I have given you, we had practiced that in our very first question about key factor decisions. I'll tell you question number. Under key factor decisions, it was the very first question under key factor. As per my latest batch, it was question number 50. Okay. Later, we had one question where you had multiple key factor. If in the same question, I give you more than one key factor, then what to do? Well, these were the rules. But these rules apply in specific situation. This is the situation when there are only two products and more than one key factor. Say two products, only X and Y are the only two products in my company, but my key factor are more than one. Material is a key factor, labor is key factor, machine hours is also key factor. Maybe there are more than one key factors. Then there are two possible methods to solve. Look, whenever ICAI has given question with more than one key factor, it will always be with maximum two products only. So products are only two. Key factors can be two or more. If there are two or more key factors given, that is more than one key factors given, then my regular method might not work. Why? Because contribution per kg might be better in product X. Contribution per hour might be better in product Y. So if kgs is the key factor, X is better product. If hours is the key factor, Y is better product. But actually both are key factors. What should we do? This is what you do. You need to go by trial and error method or graph method. Graph method was basically linear programming method. Linear programming was a separate topic which we had discussed here, or also called as the graph method. First one, chalo, trial and error method. Naturally, more better and more accurate will be the graph method. But yeah, making the graph might be time consuming for some of you. Yeah. But anyways, both methods I'm giving you here. Trial and error method, I say that you go for 3 trials. Trial 1, if X is rank 1. If X is rank 1, then first I use the key factor to produce X. And then I produce Y. Accordingly, you make the allotment. Or trial 2 is that if Y is rank 1. If Y is rank 1, then first I do allotment to Y, then I do allotment to X. Allotment of both the key factors. Yes. And trial 3 is equations method, where I make equations in order to use entire key factors for X and Y. I make equations for every key factor. So total material available, make an equation for that. total labor hours available, make an equation for that, make equation for every key factor that you have, taking x units of x and y units of y. Yeah, solve these equations, get the values of x and y, and out of these three trials, choose the trial which gives maximum contribution, maximum total company contribution. Done. Yes, we had practiced that also in certain questions. As per my November 19 batch, it was in question number 55, 56, 57, 58. All these questions were pertaining to multiple key factors. 55, 56, 57, 58. These were the questions as per the multiple product method, multiple key factor methods. So chalo, that was the first one, trial and error method. Or second method I say is go for simply graph method. This will be easier. Why? Because look, there are only two products x and y. If there are only two products x and y, make a graph x axis, y axis. X axis are the units of x, y axis will be the units of y. And this graph method is called as linear programming problem. Well, linear programming problem is a theory where for solving any such question there are two requirements. Number one, you have to make a linear programming problem. You have to design a problem first, and then you have to solve the problem. The first step, designing the problem. Designing the linear programming problem requires you to first design an objective function. Objective function means what is your objective? Well, naturally, my objective will be always to maximize total contribution from x plus y. Yeah, objective, my purpose is to get maximum contribution. So in graph method also, my objective is to maximize total contribution of x and y. Okay, for that, after objective function, then you identify equations. Equations are for conditions. Various conditions will be given. Conditions that material is limited, conditions that labor is limited, conditions that demand is also limited. Yes, so you make an equation for every such condition. Condition about key factor 1, key factor 2, demand of x, demand of y. All the four conditions that you make, convert them into equation and plot them on a graph. How to plot it on a graph? Well, you have learned that in the 10th standard. Graph kaise plot karna from a line segment from equation, that you should know, that I am naturally not revising. We had done that in class, but I am not revising. So you make equations for all such conditions given. Conditions will be for key factor 1, key factor 2, key factor 3 if any. Then conditions will also be for demand of x, demand for y. Yeah, these conditions are basically made into equations and you plot them on a graph. Once you plot them on a graph, find a common area of the graph. Common area, because the area of the graph which will fulfill all conditions, that is called as common area. That common area of the graph you identify, and endpoints of that common area you identify. Remember, if you are just giving you a sample, if your graph turns out to be like this, if your graph turns out to be like this, then your common area indicated in the graph will be this area. This area becomes your common area, and the endpoints of the common area will be this 1, 2, 3, 4, 5. These 5 points becomes the common area of your graph, endpoints of the common area. These endpoints are the ones where you calculate contribution and identify the one point which gives you maximum contribution there. Yes, now choose the trial. Each of that point in the common area becomes your trial. Choose the point which gives you maximum contribution. Done. Yes, look, each of these points will refer to some XY coordinate. For each of that XY coordinate, you calculate the total contribution, because contribution is what you have to maximize. That is your objective function. Yes, choose the one which gives you highest contribution. Ultimately, look, both my methods are trial and error methods, but the graph method will be a more accurate trial error, because here all possibilities will be checked. In a trial and error method earlier, all possibilities might not be checked, but graph method here will give you all possibilities. Done? Yes, this is your key factor decisions. Yes, many questions we had done under that, and trust me, this will be the most common kind of questions that can come in the exam. The next most common kind of questions is make or buy decisions. Yes, make or buy decisions, will revise. These are the decisions regarding whether I should make a product or whether I should ready-made buy out the product. Yes, if I make the product, then I will incur cost in my company. Let's call that as relevant cost. If I buy the product, then I will incur purchase cost of the product. What should I do? Should I make the product myself or should I buy? Simple, choose whichever is cheaper. Yes, so I will calculate relevant cost of make, and we will calculate relevant cost of buy and choose the option whichever is cheaper. Yeah, relevant cost of make versus relevant cost of buy, choose the option whichever is cheaper. This is my basic rule. Now, under these questions, you will also be asked indifference point between make and buy. Yes, because this is just like petrol car, diesel car, or imagine taxi versus petrol car. Taxi option is like buy, petrol car is like make. Why? Because taxi option means I don't buy anything, I will use the car services given by someone else. That is like buying the services. While petrol car means I buy my own car and I use my own services. Yeah, so indifference point can come between make or buy also, and the rule will be that you decide to make only if the requirement is more than indifference point. If your requirement is more than indifference point, only then you choose the make option, because look, make option will always have lesser variable cost, but make option will involve some investment, will involve some fixed cost also. Yeah, let me summarize that here. Make versus buy. Generally variable cost is less in the make option, and generally fixed cost is more in the make option. So if generally variable cost is less in the make option, meaning make option is the one where running cost is less, where your variable cost of production is less. So if you are producing more units, go for the option which has less variable cost. More than what? More than indifference point. If your requirement is units less than indifference point, if your required units are less than indifference point, then you don't choose the make option, go for the buy option. I can put it very simple over here for you. If I need only 1 or 2 units, very less number of units, if I just need 1 or 2 units, then why would I do production for just that 1 or 2 units? I will simply buy out those 1 or 2 units. But if I need 1000, 2000, 10,000 units, it might be better for me to myself make those units. Make only if your requirement is more than what? More than indifference point. How to calculate indifference point? Same rules as we did earlier. Difference in total fixed cost divided by difference in variable cost. Yeah. Now, after calculating indifference point, you decide whether I should make or whether I should buy. Now, your calculation of indifference point was based on estimates. What if this estimate goes wrong? Say for example, indifference point between make or buy you calculated turns out to be 10,000 units. Okay, your estimated production for the next year, is 12,000 units, because you expect that 12,000 units demand will be there. So you decided to produce 12,000 units in the next year. Yeah. But what if actual demand in the next year turns out to be only 8,000 units? So what is the problem? Naturally, the problem is that 4,000 units you lost. Okay? But due to that, one more problem is that look, when your estimated production was 12,000 units, because of this estimate, therefore you decided to choose make option. But if your actual demand turns out to be only 8,000 units, so you should have chosen buy option. You should have chosen buy option, but you have actually chosen make option. Well, this will lead to something called as cost of error. We had learned that in question 69 in our class. If this requirement is predicted wrong, if this estimated requirement is predicted wrong, then due to that, the decision of make or buy would also go wrong. You decided to make, but what you should have decided was you should have chosen to buy. Yes, so your decision to make or buy also goes wrong. Now in this case, we can calculate the cost of prediction error. Cost of prediction error is the difference between actual cost that you have incurred and the cost that you would have incurred if the requirements were predicted correctly. If you had correctly chosen to buy for 8,000 units, look, actually what has happened, actually 8,000 units you have done make because of your wrong estimate, because of this wrong prediction. If actually 8,000 units you would have buy, then what cost you would have incurred? Actually 8,000 units make, what cost have you actually incurred? Difference of that is called as your cost of error, because ultimately actual units is only 8,000. Because you decided to make, you started making the units, at the end of the year you realize that you made only 8,000 units because demand turned out to be only 8,000 units. And now you see that if it was only 8,000, you should have better chosen buy option. Buying 8,000 would have costed you less. Making 8,000 has costed you more. That extra cost becomes your cost of error. Consider this is also a very common question for the new syllabus now, because they can ask you lots of analysis here. Yes, this entire explanation that I'm giving, you can put that as analysis. You'll see that in question 69 in your book. Done? Yes. Further, if the question involves a key factor also, look, it might happen that the question has make or buy with key factor. Make or buy with key factor. So then you make as much as possible with the given key factor based on ranking. Remaining requirement you will buy. Naturally, if I have 5 products and I have a key factor, using the key factor I will make as much products as possible, as much products where make is better. But I cannot make everything because key factor is limited. So with the limited key factor you make as much as possible, rest of the requirement you put under buy option. Yes. But however, for this purpose, ranking is done based on savings per key factor. Be careful, when we did key factor questions for product mix decision, your decision was to decide that which product should I sell. Here, your decision is not which products should I sell. Well, here all products you have to sell. Your decision is not which product to sell. Your decision is which product should I make and sell. Rest of the product I will buy and sell. Please understand, if I have 5 products and a limited key factor, then under make or buy decision, your purpose of decision is different. Under make or buy decision, your decision is not regarding whether to sell or not. No, selling is definitely supposed to be done. Your decision is regarding whether I make and sell or whether I buy and sell. The sell is anyways going to happen. Selling price is not relevant. Should I make and sell or should I buy and sell? That depends on the cost of make and cost of buy. So the ranking that I now do here, ranking, be careful, ranking is not based on contribution. Ranking is based on savings per key factor, not contribution per key factor. Savings means the difference between relevant cost of make and relevant cost of buy. Selling price is of no use over here. Selling price is of no use in deciding the ranking. Be careful, this is the most common mistake which most of the students do. When you are deciding product mix decisions, then you take selling price minus variable cost. But when it is a make or buy decision, you do not take selling price minus variable cost. Rather, you take savings per key factor. Savings is difference between relevant cost of make and relevant cost of buy. I had even given you a format like this, that in a product mix decision, you took selling price minus variable cost gives contribution, divide by key factor gives you contribution per key factor. This was in product mix decisions. But now for make or buy decision, I change the structure. In case of make or buy decision, you will take relevant cost of buy minus relevant cost of make. Difference will give you savings of the make option. Then from that savings, divide key factor kgs or hours will give you therefore savings per key factor, savings per kg, savings per hour. This savings per key factor is the one based on which you do the ranking. Ranking is done based on savings per key factor. Done? Yes. Okay. Further, if the fixed cost of make is a batch level cost, batch level याद करो मतलब semi variable, yeah, then after giving your final answer, you should also check for making one batch less. This was one trick that I had given you, and you had used that in more than one questions, that after giving your final answer, you check that if I make one batch less, then for making units of one batch less, you will save some fixed cost. You might lose the savings of make, but you will save some fixed cost also. So net effect, which is better, you have to decide. So you will also check that for making one batch less, you can check the profit for making one batch less if the last batch is not fully used. You can refer question 71 for that, so that once you decide that I want to make 10,000 units, but my batch size is 12,000 units. My batch round figure is say 12,000 units. Then instead of 10,000 units make, if you decide to make one batch less, it might help you to save some fixed costs also. Check the profit of that option also. Check the profit of that option. If that gives you better profit, then better you make one batch less. Yeah, you'll see that in question 71. Next, note number 6, make or buy with capital budgeting. Make or buy with capital budgeting. Well, you can also be asked the question about capital budgeting. Capital budgeting question is basically about buying a machine or not. Yes. Now, why would I buy a machine? You buy a machine so that I can use this machine to make my product. How do you decide whether to do this or not? Well, you decide that by calculating NPV, net present value, capital budgeting wala. Yeah, you decide by calculating NPV of the make option. If the NPV is positive, then make is better. Otherwise, buy is better. Yeah. Okay. Then some general analysis here. If buy option is chosen, then company will have some spare capacity. Look, these lines you can use in your analysis part. Listen carefully. If buy option is chosen, then you can write in your analysis that although make is a better option, if still buy option is chosen, then company will have some spare capacity. This spare capacity it can use to satisfy some more demand of some other product, or maybe this spare capacity they can give it out on rent to someone, whatever. So there can be alternate use of that spare capacity. Yes, this can be one of the analysis you write, that if buy is chosen, then company can have some spare capacity and they can use it to satisfy more demand. But if there is no more demand, then company may lay off workers to reduce the capacity. Yes. Also discuss the quality and timeliness issues if buy option is chosen. This is for only theory analysis. Imagine in some question if you calculate and find that make option is better, then you write that yes, make option is better. However, you can mention this now. However, if buy option was chosen, then company can release some capacity, and due to that capacity released, they can focus on producing more units of other product. They might be able to lay off some workers due to that. Maybe because of this, buy might turn out to be a better option. You can just write that as theory. Yeah. Also, you can discuss that if buy option is better option, if your answer shows that buy is a better option, yes, you write down that buy is a better option. But you also write that in case of buy option, company should be careful regarding the quality of the product that they buy and regarding timely delivery of the products that they are delivered. Done. Yes, this will just help you to put analysis in your questions. And lastly, some other areas in decision making, new offer acceptance and other areas. Some other areas I have just compiled together here. We'll see. If any new offer is given, then you decide by calculating a relevant cost of new offer. If new offer is in addition to existing production, if your new offer is over and above the existing production, then remember all variable costs of the new offer are relevant always, because it is over and above the regular production. Fixed costs are relevant only if it is incurred specifically for the new offer or if they are given as avoidable fixed cost. In fact, these things are same as what we did in the rules of relevant costing. Variable cost will be relevant for any extra units of new offer. Fixed cost is relevant only if it is specifically given extra for new offer, or if they said that fixed costs were avoidable if new offer is rejected. In that case, only fixed cost will be taken. Yeah. Okay. When there are more than one types of products, then capacity is always measured in terms of hours, not units. Remember this general rule, that if in any company they have more than one types of products, product X, product Y, product Z, and they say that company is operating at 80% capacity, then that 80% does not apply to units of XYZ. That 80% applies to always hours, either labor hours or machine hours, whichever system the company follows. Yes, so hours capacity will always be measured in terms of hours, not in terms of units. Okay. Carrying cost. You know, in intermediate level materials chapter, you had learned about carrying cost. Yes, you had learned about carrying cost on material stock. Here you may be required to identify carrying cost on all inventory. So carrying cost of additional inventory must also be considered for new offer evaluation if the carrying cost rate is given. We had one such question where the carrying cost rate is given. Now, if new offer is accepted, then my stock level will increase, and on that extra stock, I will incur extra carrying cost. Consider that also as relevant cost of new offer. Yeah. Of course, that is if the carrying cost rate is given. How do you find carrying cost? Well, find inventory value of raw material WIP finished goods and then take the total inventory value into the carrying cost rate will become your carrying cost. This comes from intermediate level. Bottleneck. You remember what is bottleneck? Bottleneck is that department due to which maximum production is restricted. If I have three departments, D1, D2, D3, final product comes after department 3, D3. But if the final product comes after passing through all three departments, still out of these three departments, one of the department might become bottleneck due to which my maximum production is restricted. Well, How to identify the bottleneck? Identify maximum production of each department, then overall maximum production is the one whichever is lower. I'll remind you, chalo. If department 1 can produce maximum 100 units, department 2 can produce maximum 70 units, department 3 can produce maximum 90 units. But your final product will come after passing through all three departments. Then what is your bottleneck department here? Well, bottleneck is the department which is restricting my final production. Which is that department? D2. This is maximum production of each department. Bottleneck is the department where maximum capacity is the lowest. Well, D2 is the department where maximum capacity is the lowest. D2 becomes my bottleneck department, and D2 ka production 70 units is my bottleneck units. Why? Because look, you identify maximum production of each department, then overall maximum production is the one whichever is lowest. Now at this production, your bottleneck department is fully utilized. If my company produces 70 units final product, meaning actually they will produce 70 units in D1, 70 units in D2 and 70 units in D3. Can they produce more than 70? No, because D2 does not have more capacity. Because D2 capacity is limited, that is why D1 and D3 are operating at 70 only. If D1, D3 operate at 70, so both these rest of the department will still have spare capacity left. Just keep that in mind. Done. This was your bottleneck concept here, short revision. Return on capital employed. In many questions they ask you to calculate ROCE, return on capital employed, also called as return on investment. How do you calculate that? Well, simple. It is return on capital employed. Return divided by capital employed. Return is generally the EBIT and capital employed is the total investment done. Yeah. Expansion decision questions may require you to make format of flexible budget as per your CA inter syllabus. So flexible budget might also come in your answer here. Overtime. Some questions they'll give you details about overtime. Overtime means what? Overtime working means same workers are made to set extra hours. Hence we have to pay them higher overtime premium. Say 50% premium I need to pay. Now there's a difference between overtime working and second shift working. Overtime working means morning workers are made to sit till evening till night, extra work. While second shift working means that morning shift workers do their work and go home. In the second shift, evening shift, I hire new set of workers. Now what is the benefit of hiring new set of worker in the second shift? Well, in the second shift, if I hire new set of workers, then I don't need to pay them 50% premium. I pay them premium only if they are sitting extra hours. Now these are new workers. They are coming in the evening only. If they are coming in the evening only, they are not sitting extra hours. I don't need to pay them premium. Maybe I just need to pay them little extra like night shift allowance, but it will not be so much as 50% overtime premium. If morning workers are made to sit extended hours, I need to pay them 50% extra. But for the evening hours, if I hire a fresh set of workers, new set of workers, I don't need to pay them so much premium. Yes, so second shift working means new set of workers are hired for extra work. In this case, we may pay them same rate or a little extra rate, not so much extra 50%. Yeah, but in this case, we will incur extra fixed costs like recruitment cost or maybe other fixed costs you might incur. You need to decide in the question whether overtime is better or second shift working is better. We have done some such questions also. Yeah. Thus, the problem is that overtime will have higher variable cost because 50% extra premium you pay, while second shift working will have higher fixed cost. That is cost of recruitment, cost of training and all. So between overtime and second shift, you can also calculate indifference point. Well, that also we had done in some question. I'll just give you reference. That was question number 96 in my November 19 material. Okay. And finally, now the most important part. The most important part in my revision session here is how to answer analysis. Look, I've told you earlier and I'm telling you this repeatedly that now at CA final level, costing subject is not like the costing subject in your CA intermediate level. Now this subject is focusing less on calculation, more on analysis. So when you write your answers in the exam, it will not be sufficient that you just write the calculation, reach an answer and leave it there. No, in every single question, yes, in every single question, you have to write your analysis. Whether they ask or whether they don't ask, I suggest you always give recommendation, always give your analysis. For questions pertaining to this chapter, how will you write analysis? I'm giving you some guidelines here. Yes, these are the guidelines regarding how to write analysis in decision making questions. Dekho, in case of CVP analysis questions like BEP, margin of safety, shutdown point, indifference point, BEP by ratio method, BEP by stepwise method, BEP with semi-variable cost, all these we had learnt. For every such question of CVP analysis, give interpretation for every such analysis. If they ask you to find BEP, write interpretation. What is BEP? What is use of it? If they ask you to find margin of safety, write interpretation. What is MOS? What is it used for? Write down what is shutdown point, what is it used for? What is indifference point? How is it used? In this question, how will it be used? Pura likho, write all the description theory likho. Yes. Also give your recommendation in the given case based on this interpretation. Give your recommendation that whether the company should shut down or not. Give your recommendation that whether they should choose petrol car or diesel car. Give your recommendation regarding break-even point. Whatever calculation you do, give interpretation and recommendation. Interpretation and recommendation. Always write that. Use some lines, few lines for that. Yes. Second, explain the logic behind the calculation method as explained in the rules for calculation above. For example, if you did calculation of relevant costing or you did calculation of break-even point, you give your explanation regarding that calculation. If you calculate shutdown point, give explanation that why did you use only avoidable fixed cost. All the explanation of formulas that I have given you in class, that I have given you earlier here, those explanations you have to write in the exam. Remember, when you answer your question in the exam, you are not answering it in the exam. Remember, you are answering it to your client. You are a practicing CA. A client has come to you with suggestions, and when you are giving him suggestion, you don't just tell him to do this. You tell him to do this and you explain him that why are you telling him to do this. Yes, so you have to explain the logic behind all the calculation done in the answer. For all the relevant costing calculations, whether the question is of relevant costing or whether it is make or buy question or whether it is transfer pricing chapter, and all these places relevant costing rules are used. Whenever you use my rules of relevant costing, you have to write explanations for every item of cost given in the question. Give explanation for each item, that why is it taken relevant or why is it taken not relevant. Even the items which you take as not relevant, maybe sunk cost, you explain that why did you consider it as sunk cost and explain that sunk cost is not relevant for decision making. Explain why an item is considered as sunk cost or why is it considered opportunity cost. And finally, give your recommendation that whether they should make or buy, whether new offer is accepted or not. All such recommendation will also come. But before a recommendation, you know what most of students do is, you do the calculation and at the end you give just one line answer that yes, new offer should be accepted. I will not even give you half the marks for that. For relevant costing questions, for every single item of relevant cost, I need you to write explanation that why did you take this material cost as relevant, why did you take this obsolete material as relevant, why did you take NRV for this obsolete material. Everything you have to write depending on the data of the question, depending on all the different types of data given in the question. If I give you, say for obsolete material, I give you book value, I give you original purchase cost, I give you market price, and I give you NRV. You will choose NRV, correct. But you also write explanation that why did you not choose the other three. You have to write explanation that why did you not choose those other three items. That will be your analysis here. Be careful for relevant costing questions. Your analysis part will be much longer than your main answer part. You might be able to finish answer in just 4 lines. But then for each of those 4 items of relevant cost, you have to write a detailed explanations. You also have to write explanations for the items that you did not take as relevant cost. Done. So your analysis part will be generally bigger than the main answer part here. That is why when you see the suggested answers of these last few exams, you might find that the suggested answer seems to be more theory, less practical. Well, it is not more theory, it is more analytical. Done? Yes. Okay. For key factor questions, explain that key factor will limit the production. Explain what is key factor, why is that the key factor. Explain that the key factor will be restricting the production. Explain that this key factor might become bottleneck. You can explain what is bottleneck also. Then give your calculations and all, and then finally give your recommendation. For make or buy decision, again analyze relevant cost as explained in point 3 here, and give recommendation whether make or buy. Yes. And in case of indifference point questions, give interpretation of indifference point, and if it is indifference point between make or buy, you give your interpretation that you should make if production is more than indifference point. And finally give your recommendation that in this company they are planning production of this much, so they should choose make option or they should choose buy option. Done? Yes, all that detailed analysis you have to write in your answers. Done? Yes. So this was my full revision session for decision making chapter. Most important part of my revision here was these rules regarding how to answer the analysis. Done? Yes. That's all. Thank you very much. We'll be doing for another chapter in another video. Yeah, that's all.